Good morning, guys. Happy Friday, everybody. Hope you guys have all had a great week. I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So we did break out of the end of our pennant here. All we realistically got though was an expansion of volatility, and we do find ourselves trading not too far away from obviously where all the previous price action was. So we just had low vol that led to high vol. But obviously we are trading lower. We are trading below obviously where the pennant would have been to break out to the upside. We're trading below the downside of the trend line. So yeah, clearly it's not ideal. We do obviously have a new spanner thrown in the works, which is that there's going to be a Fed meeting on Monday the 14th, which is they're clearly going to raise rates. I mean, there's no reason for them to have this meeting to discuss rates if they're not going to raise rates. So it is near a certain. I think the markets were actually pricing in a 75% chance of a 50 basis rate hike in March the 16th was when the next meeting was. So I think what we're basically going to get is a rate hike on Monday and a rate hike on obviously March the 16th. They just kind of probably didn't want to do them in one go. So market hates uncertainty, but saying that, it is now pretty certain what the Fed is going to do. Raise rates Monday, raise rates March 16th. Like I said about inflation, these are going to be the highest prints we're going to get before base effects start to kick in, and it's going to be very difficult for us to maintain plus 7% obviously with obviously what are year to date like yearly trading figures. That can ease off. So yeah, maybe they get these hikes in now, and then they have some leeway to then basically not do the 7 rate hikes that some people think are going to happen over the rest of the year, which isn't going to happen. The economy is a lot weaker than the economy. I'd like to say a lot weaker than what people think, but I know people think it and know how weak the economy realistically is. It's not as weak as people are pretending it is. It's weaker than people are pretending it is. That is it. So basically, the economy will weaken into these rate hikes. There are all sorts of forces. We are basically getting a nice little bounce, a post Omicron bounce, and clearly we are gonna obviously suffer after that bounce peters out. Having a look at stocks, they are doing their best to hold this horizontal here. I think initially, obviously, it was probably right initially to sell off on this, and we may get some more selling into the opening of Wall Street on the East Coast in a few hours. So we may get some more selling, but ultimately, like I said, markets don't like uncertainty, and there was uncertainty around obviously March being a 50 basis point hike or what they were going to say, and now I actually think we have clarity, which is maybe what the Fed was going for. Because now obviously we're going to have 25 and then 25, and we know exactly when. So the market may digest this information and then start to move up, and I think that's a likely possibility. Because markets like to number only go up, but mainly just a certainty. And also I do think, like, if it is possible for the Fed to get rate hikes in quick whilst inflation is printing bad, inflation is going to come down pretty quickly, not necessarily from what the Fed's doing, but just due to base effects, and also due to the weakening economy. And then it means going forwards they can then pretty much pivot on all the rate hikes that the people are expecting into the end of the year. So some interesting dynamics going on here. Obviously here we have the 2-year reacting on that. The 2 years basically pricing in, yes, that is what's going to happen. So we are in pretty nosebleed dangerous territory here. I've been talking about getting over here being disastrous for the stock market. So Yeah, we shall see. We shall have to see how this plays out. It was obviously disastrous for the stock market on my assumption that inflation was the print was going to top out at 7%, but we've now hit 7.5. And whilst I think that will be the top, maybe next month will be the even higher, and that will be the top. So obviously that gives room for this to move up without necessarily trashing stock markets quite yet. But like I've said, this level of interest, a measly 2%, is not sustainable for such an indebted system. So DXY obviously moving up off this as well. More importantly, moving above this resistance area. So it is now back in its channel, which I kind of expected it to do, until obviously the Fed comes out with some wild stuff, or we get some wild stimulus, or we get some wild yield curve control. Potentially trade back up in here. So obviously with 10-year, I mean 10-year moving up, yeah, I mean we're obviously getting a bid in the dollar. Yeah, so oil is still hanging around there, no real reprieve there, but I do suspect this will test some downside. If we get some basic downside in the stock market, I do expect oil will come down with that. Not obviously a ridiculous amount, but it will come down. It will come down somewhat. Gold just hanging around there again, tried to push above this all important horizontal that it struggles with, again rejected. Maybe this will be it, maybe this will be the time. Inflation is running high, the Fed is on the back foot, the Fed will never get onto the front foot, the Fed will never get ahead of the curve. The Fed is so far behind the curve it can't see the curve, so ultimately this will probably make a move up ultimately. That's what everything like that I understand about financial markets tells me, but clearly it has been struggling forever. So but yeah, ultimately I do expect that they can't hold this ball under the water for too much longer, and they have to like have an organized retreat of the manipulation and probably let it settle around $2,000. So what else to look at here? Yeah, not much else. We look at the Ethereum Satoshi pairing. Not doing too much here. Maybe it's going to form a descending channel. Not too sure. But like I said, this is still bearish. And unless we break above here, we are potentially going to be looking at new lows, and obviously that will come in if stock markets have a crash and take Bitcoin out with it. Ethereum USD pairing as well, not as bad here, got some levels of support in this zone. It needs to get above here for it to look good, but as long as it can hold this level, it look okay. But yeah, I mean, you can still see a clear downtrend here, and if we do lose this horizontal 2,800, then yeah, we are potentially looking to, well, potentially come down and test towards 2,200-ish again. But yes, like I've said though, ever the optimist here, I do believe that the market now does have more certainty regarding rate hikes, and ironically the fact that the Fed gets them out sooner and quicker, it is more likely to break something, which then allows or means it then won't be raising rates as much into the end of the year when we basically mess up the economy. So yeah, interesting dynamic there. But looking at Bitcoin here, obviously we've come off the back of a massive move down here. You can potentially argue that Bitcoin is an inflation hedge. So maybe it will perform okay in this environment, maybe it won't, maybe it will follow stocks as it usually does, but it is looking relatively precarious in the wider context of what is going on. So I mean, I wouldn't be surprised to see some test down into here, and then realistically it depends on how the stock market digests this information. But like I said, on the face of it, it's not good, but actually the main thing markets don't like is uncertainty, and if we now have relative certainty, and even in my opinion more certainty regarding what will happen later on in the year with rate hikes, when obviously the Fed gets well, I say too aggressive. It is obviously not too aggressive to fight inflation, because it's clearly not fighting inflation, but too aggressive to basically allow stock markets, allow basically the economy to to survive in somewhat is inflated fashion. So yeah, interesting times. I expect over this weekend we will pretty much be dictated on how this closes today. If we can close above this support area, I mean, realistically we want to see anywhere in towards the mid 4,500s for the S&P, then I think we'll have a bullish weekend for BTC. If and this is a distinct possibility, we close before 1450, close below 1450s in this area here, it will be quite bearish for people looking at this chart, and then obviously selling risk assets. Obviously crypto been about the only risk asset that they can dump over the weekend. So I think that is what we are looking at here today. So remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.